The rounding bottom, also known as the saucer, is a pattern that shows how market slowly transitions from weakness to strength. Unlike sharp reversals, this pattern is quiet, patient, and progressive. It doesn't announce itself with a single candle. It builds over time, showing how sellers gradually lose control while buyers slowly step in. A rounding bottom forms after a downtrend and looks exactly like a bowl or a saucer. Price falls, then begins to flatten, and finally curves upward. There are no aggressive breakouts at first, no sudden spikes, just a slow, steady shift in momentum. Let's talk about the psychology behind this pattern. At the beginning, sellers are fully in control. Price keeps making lower lows. Bearish sentiment dominates. Then something changes. Each new push lower becomes weaker. Selling pressure starts to dry up. Buyers don't rush in, but they quietly begin accumulating. This is the key idea behind the rounding bottom. Selling pressure fades before buying pressure becomes visible. Here's a simple real-life analogy. Imagine pushing a ball uphill and then letting it roll down into a shallow bowl. At first, it moves quickly downward, then it slows near the bottom. Finally, it gently starts rolling up the other side. That smooth transition is the rounding bottom. Unlike patterns like double bottom or inverse head and shoulders, the rounding bottom does not show sharp rejection points. Instead of sudden bounces, it shows gradual improvement. That's why it's especially common on higher time frames. Volume behavior often supports this pattern. During the left side of the saucer, volume is usually higher as selling pressure dominates. As price flattens, volume decreases. Then, as price begins to rise on the right side, volume slowly increases again. Now, let's talk about the confirmation, because even slow patterns need a signal. The rounding bottom is usually confirmed when price breaks above a key resistance level formed during the earlier decline. This level acts like a neckline, even if it's not perfectly flat. As long as price remains below that level, the pattern is still forming. Once price breaks and closes above resistance, the reversal is confirmed. The breakout tells you buyers are no longer cautious, they are committed. This is an important rule. A rounding bottom is not confirmed just because price curves upward. The breakout is what turns a warning into a signal. Now, let's connect this pattern to smart money concepts. Rounding bottoms often align with accumulation phases. Institutions don't buy all at once. They accumulate slowly over time without attracting attention. That slow accumulation creates the saucer shape. This pattern is often found after long bearish trends, near major support levels, in discount zones, or after panic selling has already occurred. It's especially common in stocks and higher timeframe forex charts. Let's make this very practical. Imagine a market that has been falling for months. Sentiment is negative, news is bad. Then price stops falling, it moves sideways for a while, slowly it starts rising. By the time price breaks above resistance, the market has already shifted from fear to confidence. That shift is the rounding bottom. One mistake beginners often make is expecting fast moves from this pattern. That's a misunderstanding. Rounding bottoms usually lead to sustained trends, not quick spikes. Patience is part of the setup. Another mistake is entering too early. The bottom can take a long time to form. The safest confirmation is always the break above resistance. Now, let's lock this in with one final analogy. Think of the sun rising at dawn. It doesn't jump into the sky. It slowly appears, gradually brightening everything. That slow transition from darkness to light is the rounding bottom. So, to summarize, the rounding bottom or saucer is a bullish reversal pattern that forms gradually after a downtrend. It shows a slow transition from selling pressure to buying pressure. Price forms a smooth U-shaped curve. The pattern is confirmed when price breaks above resistance. In smart harmony concept, it often aligns with accumulation and long-term positioning. The rounding bottom is the market saying, I'm done failing, I'm not rushing, I am quietly turning bullish.